All right, so that's kind of the tax bracket, tax side of things, self-employment tax versus ordinary income tax. So these are the ordinary income tax rates. So you're going to pay these rates on your business earnings in addition to the self-employment tax that you're going to pay. The self-employment tax pays you into the Social Security and Medicare system. This is just the income tax side of things that you're paying. So you'll be paying both sides there. So I just wanted to touch briefly on how do we actually track this information? What do I need to keep records of for tax purposes, and that sort of thing. So first of all, first piece of advice I would give you, keep your personal and business expenses separate. The easiest way to do that is just to set up a bank account for your business. Track everything, purchase everything for your business with that business bank account. Put all your deposits for your business in the business bank account. That makes it easy because then you already have this separate tracking of that information. You can easily go pull up your bank information online or get your bank statement and say, okay, well, I can go add up all the deposits, see what came into the business with income during the year. And I've also got a list of everything that I paid, which would be my expenses. From there, you're going to have to do some summarizing, determine actually what kind of expenses they are. So you have to categorize them a little bit, which I'll show you here in a minute. But that's a good first step. Also, from a legal perspective, keeping your business and personal expenses separate helps protect you from a liability standpoint as well, because there have been court cases where people are commingling business and personal expenses, and the judge says, hey, you're not really running a legit separate business here anyway. There's so much personal and business in there that they said the liability protection doesn't apply. So I just want to be careful of that. And the best way to do that is just to keep your own business bank account. Second one is just keep good records. The best way to do it, good records, first get yourself a business bank account. Once you've done that, then you need to start keeping all your receipts, all your invoices, your bills, and things like that. Because what happens if you get audited by the IRS is they want to see your accounting records. So you might have a summary. You could show them a bank statement saying, here's money that came in and out. But they're going to want you to go a step further and say, where did that money come from, or who did it get paid to? So you're going to have to prove to them that, yes, your accounting record might say I paid a check to so-and-so for advertising. They're going to want to see an invoice from that person showing that you owed them for advertising. Otherwise, they're going to get concerned that you are just paying a friend or a family member and deducting it as a business expense when it's not. So keeping good records is important. So you need to figure out a filing system that works for you, how you're going to sort those, be able to pull those up later if you need them under an audit. It also just helps you if someone ever has a question, maybe you're just going back to prior year information, saying how much did we spend on this? And then you have that backup as well. You can go pull for that as well. So keep that information on file. And then with that, summarize and track it somehow. So this could be just in a spreadsheet, just very simply, just track everything that comes in and out, and then categorize what it is. So have a column saying this is where it came from. It was from a customer for this. If it's an expense, say, hey, I paid advertising to this company for doing this sort of work for me. They put together business cards or something like that, and keep track of that and summarize that, because you're going to have to use that information to prepare your tax return. So